Good afternoon and welcome back to the latest edition of the InvestTalk Market Analysis for the week ending March 1st, 2024. And I am host of InvestTalk, Justin Klein. And this week I am going to title the video, Gold Breaks Out as Economic Data Darkens. So I said last week there wasn't really a lot of economic data, but this week there was a good amount. We started off on Monday, durable goods new orders, negative 6% month over month. The worst month over month move we've seen since the pandemic, pretty much, right? So that was telling. Richmond Fed manufacturing that did improve a little bit, but still in negative territory. Total vehicle sales, look at this, down from 16.5 to 15.5. That's on an annualized basis, so a pretty big move down there. You have the PCE, that was the big news on Thursday. That was a month-over-month basis, a bit higher than expected, but you did continue to see year-over-year a deceleration, 2.4 overall and 2.85 on the core. Construction spending also took a dip down into negative territory for the first time since summer of 2022. And then and this is the one I think that caused the big breakout was the tick down in consumer sentiment. So I think taken as a whole, you saw economic data overall definitely weaken, and here's gold with that breakout. Now, will it hold? We'll see. It is on good volume after a consolidation period, so would not be shocked to see this continue, have continuation to the upside. And, the dollar is the tell here. The dollar is not making new highs. Even though incrementally the Fed or the futures got more hawkish. So I'll show you this right here. Just go back to this. What you'll see is these odds of a Fed rate hikes through the end of the year, they actually, the highest outcome a week ago or a day ago was 33%. That would be about 5 rate cuts, and 4 rate cuts. Now it's back down to 3 rate cuts. So that caused, I think, that weakness in the dollar on Friday, and this does look like it's ready to roll over. And if it does, this would be a lower high, and it would be a continuation of a downtrend in the dollar. And a lot of it is, here's the euro. The euro has been gaining strength because the European economy is coming out of a recession, while we're kind of meandering into one. And so the economic data certainly confirmed that this week. What else do I want to get to? Oh, the 10-year. The 10-year rolled over as well, down 7 basis points. This is starting to look like it wants to head back down to the high threes from 4.25 that it was at the start of last week. Let's see, what else do we want to get to? The MOVE index. So this is also another tell that, hey, the Fed is going to get more dovish. The volatility of the Treasury market continues to stay subdued, which means, okay, the Fed doesn't need to get more hawkish in the near term. Now, broad markets, here's the NYSE that did hit a new 52-week high. Here's a weekly chart, and that's certainly bullish. You had the Qs. It was interesting. There was a lot of volume on a lot of the big tech names on Friday. For Thursday and Friday. So you see that here on Apple. Google had above average volume. I'm just going through all the Mag 7. Amazon didn't have much. NVIDIA didn't have much, but there was some interesting volume spikes. Here's MSCI. This is making a lower high. NVIDIA, as you can see here, this is struggling to really break out. It still hasn't broken above the high from a couple days after earnings, so we'll be on watch for that potential reversal. The XLK did make new highs, but you can see the MACD here does have a bit of a divergence. So I think we are in the vicinity of a near-term cyclical high. Doesn't mean that you can't have a pullback like you had in the summer of last year and then another breakout. I think that's probably the most likely scenario. On the S&P, you had roughly a 12% pullback from peak to trough from late July all the way into late October, and then obviously you saw a breakout. So would a 10% pullback be a shocker? No. Remember, that's a typical pullback in markets. So if we pull back from, here's the S&P 5100 right now. If we pull back down to about 4600, which would be the breakout area here, right, where the high from last summer was, that would be a normal kind of stair-step pattern where you get a pullback, a breakout, a pullback into where the previous breakout area was, and then you get a resumption of that move. And would not shock me to see that continue to be the pattern going forward, because certainly markets are off sides and everybody is bulled up the opposite of where we were just in the fall, and you can see how fast sentiment can move. So it doesn't mean we have to make a high next week or even next month, but probably sometime between here and mid-year, especially because if you look at the RRP, the reverse repo, that's being drawn down. That should be exhausted sometime in May, June, and then that's when reserves from the banking system are going to start being drained out of the system with QT and put a strain on liquidity. So I could certainly see that being a time frame where you get a bit more volatility. Here is the short-term treasuries. This is staying very, very robust. Nothing wrong there. Growth to value, you saw growth get a bit of an uptick on Friday, but still not a breakout here. So this will be interesting to see if we get a breakout next week or we get a resumption of a rollover. And I think a lot will depend on that dollar. If the dollar continues to weaken, value should take over because you should continue to get some strength out of energy. You see that starting to form a nice uptrend there. Industrials continue to be strong. That's probably the strongest part of quote unquote value part of the market. Let's look at the SMH. That's always interesting because it does tend to lead. Yeah, that did have pretty high volume on Friday, but this is just an uptrend that isn't showing signs of near-term reversal. But on watch, considering how extended this is. Let's go to a weekly chart. Right, look how extended this gets. And if you zoom back here, right, this is even more extended now than it was back here. Okay, so these can only get so far away from their 50-week moving average, for example, before they need to take a breather. And I expect that to happen over the next, say, 2 to 4 weeks, but we shall see. What else do I want to get to? The VIX, see if there's any signs of the VIX getting some strength that would portend to more volatility in the near term. And the answer simply is no, not really. I had a little spike here, but it's been pretty depressed ever since. Now we are going into option X, not next week, the week after. So that potentially could bring more volatility. And if I'm going to pick a time frame, it's probably right after that op X or late in the following next week. I think that's about it. You have to be modestly bullish, even though the market's so overbought. These trends tend to stay until there's some sort of signal of a major reversal, and we're not getting that yet. The credit markets aren't really rolling over. A weaker dollar and generally be positive for risk equities, but obviously liquidity dynamics are going to be most important, and near term, they're fine. So that's where we're at on watch for a potential top, that we're in the general region, but you don't want to react too soon because markets can certainly continue to grind higher as they have over the past few months, for longer than you imagine. So you don't want to be taking profits too aggressively quite yet. You also don't want to be jumping on the short side quite yet. You want to be looking for more concrete signs besides sentiment. Yes, sentiment is extreme, but when liquidity is good, sentiment can stay extreme for longer than you expect. So that's kind of where we are at. But thanks for tuning in. Reminder, the contents of this video are for educational purposes only and should not be construed as a recommendation to buy or sell a security or to participate in investment strategy. The views are my own and do not represent those of KPP Financial or those associated. Have a wonderful weekend.